Welcome to Forex Success. So guys, in this video today, I'm going to explain to you how you can trade on a long-term frame using the indicator strategy and price action strategy. So make sure you watch this video carefully, and the benefits of this video is that you're going to understand the difference between using indicator-based strategies and using price action. Then also in benefit, you're gonna get a signal of whichever pair we're gonna be analyzing today. You're gonna get a signal so that you'll be able to know where to trade in accordance to the analysis we're gonna do today. So guys, if you don't know what we're trading synthetic indices on Deriv. The link to create an account is at the description of this video. So let's get started. And if you're new here, make sure you click the red subscribe button so you can subscribe to this channel and follow, and click on that red subscribe button, that notification bell, so you'll be notified when we drop a new video, so you won't miss out. As you can see, we're giving out a free signal on this video that's gonna benefit a whole lot of persons. So I did the previous video which I made, I gave a signal on volatility 10 index that it's gonna drop, and I've been receiving a lot of testimonies from persons who are actually making money from that signal because it's dropping. So by the end of this video, we're still gonna drop a very nice signal on step index because that's what we're gonna be focusing on today. So make sure you turn on notification bell, and the link to our Telegram group is at the description below. Make sure you follow us. Also follow our Instagram account. Okay, let me get started, guys. Firstly, I can clear this is a weekly time frame. A weekly time frame is what I'm using for now. Since this is a weekly time frame, I can clearly see the first thing I want to identify. This is price action, guys. After we are done with price action, we'll get into the indicator based strategy, so you can combine both together. The first thing I want to look at from an index or a pair that I want to actually analyze, I'm going to look at the trend, and clearly I can see this is a downtrend right now, a clear one at that matter. So I can just simply get my trend line, put it at the high of this. Oh no. Okay, I can get my trend line there and draw it to the downside, you see, making it touch the highs. I just need to shift it. So this is my trend line, guys. Okay, so I got my trend line right here, the first touch, second touch, third touch, and here, right here, at this point, you can see it is not a clear breakout because it actually, we can call this a fake breakout at that point. And if I'm to adjust this trend line a bit, let me just shift this back. Yeah, I can adjust this a bit like this. Great. So you can see clear. Oh no, okay, mistakes here. Okay, so we're done with the trend line. Yeah, so we can see, guys, at this point, this first shows us that the market is still on a heavy downtrend. This is from the weekly time frame. You can see how huge this time frame that we're using is. So we can see clearly that this is on a heavy downtrend. So what are we actually focusing on? We are focusing on selling this guy because we want to trade against the trend, so that just to be on the safer side. So since it's on a downtrend, I'll be looking out for sell opportunities. Right here, this kind of confusing. This is actually something, it's just normal on Deriv. Yeah, this is what we call Deriv manipulations. It's just a false breakout, so it doesn't really change anything. So now, seeing this for my weekly time frame, I got a trend line right there. Then I'm not going to look for key levels, that is support and resistance level. And so in order for me to get my key levels, I will just get this horizontal line, which I'll just mark at levels that I know there are a lot of touches on the market, and this is one. So we'll just do our area of focus right now, where we're actually looking out. That's one point where the market actually reacted to, because the market came from the upside. Let me use this to demonstrate. It came from the upside. This is another level to also focus on. This point right here. The market broke through this level because it bounced from it at this point before. Then it broke it, bounced again. So this is actually a key level, that red line that we marked right there. So for now, guys, that's our main key level that's close to the current price right now. So now, since I have my key level that I marked here, I would not check out for candlesticks pattern. What candlestick pattern is actually giving me a reason to place a sell? Guys, this is a morning star right here. You can see this red candle. This is a morning star, and this is the reason that made me took this sell for this at this point. I took this sell. I got into this trade at this point for a sell on stepping this. Yeah, so I'm currently on stepping this sell, and I'm targeting it all the way to the downside. So at the point of watching this video, because I'm gonna be uploading the video as soon as I'm done with it right now, so that a lot of you can also take advantage of it, so you can enter and make money too. So seeing these spin tops, you can see the horizontal line right here. This resistance level was not broken. It just made a long wick to the upside and came back down. It wasn't broken. So our lower highs and lower low is still very more, they are still very more intact. It wasn't broken, it wasn't violated, it's still coming down. So we are expecting it to form another lower low again to the downside, seeing that our trend line is still being respected. We had a false breakout. You can see this is what we call derivative manipulation, guys. This sell was supposed to start right here, and I took the sell from here, but then it hit my stop loss. You can see from here, this point, guys, this was where the sell was going to start, but then it made this massive bullish candle and then took out a lot of stop losses. But then it only to confirm it as a false breakout with this morning star candle right here. Then we got in again for a set and then coming all the way to the downside. Exactly how we trade this bad, guys. So we're expecting it to move to the downside. So don't worry, don't get too bored, because I'm still going to show you how with indicators, and then how indicators will be able to point at the signals for you as well. So the price action has actually done its job. We're not just going to focus on only the weekly time frame, but the weekly time frame will actually show you the overview, and you're not also trading from them. You want to go to a lower time frame to also see what's going on. You can see what I'm talking about, guys. This point right here is where it was actually supposed to drop down from, but then made this first breakout to the upside, then start coming down again, respecting the same trend line. So we're pushing this guy to the downside. If you go to 4-hour time frame, that's when you'll be able to get a very nice entry to take this trade, as well as the 1-hour time frame. But higher time frame, like weekly time frame, actually gives a very nice overview of the market. So since we are done with that, let me just introduce the indicator that will also give us its own view of the market, what he thinks about step index. So we're going to be introducing moving average, which we are setting on period 10, shift 0, method simple, apply to close. Then the levels, ignore, we're not using any levels. Then style is red, should be 4 pixel. Then you click done. So this is the moving average that we just introduced right here. Then we're going to need one more indicator, which is the MACD. Where is that guy? Okay, MACD. The fast EMA 12, slow EMA 26, MACD SMA 9, apply to close. Then for the style, the main is black and the signal is red. You click done. So this is all the indicators we need for the strategy. Look at our beautiful trend line, guys. Still very much intact. Olinda we just had, guys. This is crazy now. Like look at this trend line. Like trend line is one of the best tool while using price action. Imagine for each touch you're placing a sell. Like at this point you place a sell, guys. Do you know how much pips is this? Let's just do a little bit of calculation. Let's assume you are not sure about it, and then you wait for the candle to close out, then you enter. This is 9381. From 9381 down to, let's just take it here, 9381 to 9055. How much is that? That's 330. So 330 pips on step index. If you're using the smallest lot size, which is 0.1, it definitely means you're making $330. So if you're using one lot size, you're making $3,000. If you're using 5 lot size, you're making $15,000 in just, that's how many weeks? How many weeks is that? 1, 2, 3, 4 weeks in a month. $15,000, guys. How much is your salary? So that's just how it is, and you have a very little risk. So that's it. And I will advise you guys, while trading stepping this, you should try and maximize, like, just try to create more space, maximize the space, that is the stop loss level for your trade, because they do some crazy things. You can just see a long push to the upside, you just go and take out your stop loss, and then the trade come back to the down without without your position. It will come to your direction, to your prediction, but without your position, without your trade. So it has happened to me a lot of times. So sometimes if I want to trade stepping this, actually sometimes I won't want to put a stop loss, because most especially when I'm sure of where the market is going to, I won't just want to place a stop loss, because that shit has happened to me a lot of times. It just go there, take out my stop loss, then come down, continue moving, and the volatility is going to be very high. It's going to be very high that I'll just be angry that I didn't actually put that stop loss right there. I would have been about 200 pips in profit, making about $2,000. But then with the useless stop loss being hit, I will not make anything. I'll just lose that. Well, it's fine though. Sometimes you might be very grateful for placing that stop loss. So it's just happening in different ways. But I just believe you know what you are risking on every trade. You know the maximum amount you are gonna risk for every trade. That's just the best way to do this thing. But maximizing the space, because step index, volatility 75 index, they like to move haphazardly, like irrelevant moves. They just make irrelevant moves, like that doesn't even make sense. They just move like that just to hit somebody's stop loss. So that's for that, guys. So seeing these guys, okay, the first touch right here came down, first touch again, giving us a lower highs, and then what, we're expecting another lower low again. So from this point, we're expecting this market to come even deeper, giving us a lower low. So if you're able to get into this market from this 8562 level, and you're able to take it even to this previous low, which is at 8410, that means you're making around $150 with smallest lot size. And if you're using one lot size, means you're making $1,600 exactly. So that's how it is. You can jump into this trade and make good money. So let's talk about that of the indicator. Wow. So how do you use this indicator, guys? When this red moving average cross above the chart, and once you see the red moving average cross above the chart, it indicates a sell. So at this point, this is only a continuation of, at this point right here, guys, it's only a continuation of the first signal given at this point. This is the main cross above. This is it, the main cross above. So the red moving average crossed above this chart, and then the MACD crossed up, the red line at the MACD crossed above the bar. It definitely means a sell is about to begin. And look at the massive sell we got. The market rushed down to the downside, you see. So this is how the strategy works. But sometimes at this point, just like that of my entry, so I want to show you the differences right now. So this is where I actually got into this trade from. If I'm to use only the moving average at this point, guys, this trend line, look at the trend line and the candlestick pattern I got, I took the sell much earlier than when the indicator is giving me the signal right now. The indicator is actually giving, so if I was using just the indicator, I would actually be taking my sell now, because it's actually crossing above it again right now. So I will actually be taking my sell now, considering the fact that this is just actually giving me the signal right now. But with price action, you actually get that signal more faster. So let's just take it down to the daily time frame. From the daily time frame, it's a bit faster. You can see the cross above. This is guys, this is so massive. Look at it. The indicator also gave me this signal also very fast. It crossed above at this point, and then market moved to the downside. So this is an advice for you guys. You shouldn't take your like the moving average indicator shouldn't be, it won't give you it correctly or perfectly on a higher time frame like that of the weekly time frame. It's actually kind of not really correct, but on a daily time frame you're gonna get it more faster. You can see it's even almost at the same time or the same point with the with the with the technical analysis tool, you get. So but for the moving average on the daily time frame, you can see it was very fast. Like you got the signal right here. Look at this point. So at least your entry should be around this level, achieving these pips to the downside. So guys, these things are working. They are working. Just get your plan, get in, have an exit point, guys. Even if you win 2 out of 5, you're still gonna be profiting on this. Yes, that's just it. Even if you win 2 out of 5, you're still gonna be profiting out of it. The rule is just don't allow that one lose that you're gonna lose to end everything. That is if you are not taking losses. If you're not taking losses, that's when you have a situation whereby one loss take out all the 5 profits you've made before and even your capital. So that's just the wrong thing, the wrong aspect of trading. So if you're not doing that, you hardly blow your account. What's hardly? You will not even blow your account if you follow the rule. If you are not in a hurry to make money, don't be in a hurry to lose your money. Because if you are in a hurry to make money trading synthetic indices, guys, you are equivalent. You're also in a hurry to lose your money for it. So I believe this actually helps some persons right here. And make sure this signal for I just gave right now for step index, you can just wait for a little push to the upside. You can also go for the smaller time frame to get an entry. For right now, guys, we can see it's actually crossing, it's trying to cross below, so maybe we might have some push to the upside. Then after that, you can get in for a set. So thank you once again for watching Forex Success. Click on the link at the description below to create an account so you can start trading as well. Thank you very much for watching. Please guys, make sure you follow our Instagram. Yeah, no, we've not been that much active right there, but I'm gonna start to be posting definitely on Instagram. So please make sure you follow us. Let's get our account to 5K as well. So thank you for watching.